Hello friends, let's take a look at the Ethereum chart together. And these are the notes that we had on here from the other day. Let me just kind of move it off to the side and zoom in a bit so it's less kind of messy as we look at this. Right, okay, so we have these things to point to. 236 is important. Pushing past that will challenge the larger pattern of the descending wedge. We've done the full moves off the smaller time frame patterns. The key price again, to no one's surprise, 353-ish. Reminder, lack of bullish divergence on the BTC pair. That's what we were talking about in the run up to this most recent price action. And we can see that actually subsequent to all of that, we've done a couple of additional things. One of which being, if we look at today's price action, has come down. We've actually filled in this golden pocket area on the Fibonacci retracement zone. So should we see a turnaround from just here, that would be quite positive and be a resolution of what has been a somewhat downward movement post ascending, broadening wedge on the go over there, and could then conceivably take us up towards these higher targets of the 21 EMA and the 55 EMA in that higher 350s zone, 355 and 358 and all that sort of jazz in and around there. And movements past that zone would actually be taking out the previous high over here, and then we'd be able to say that we have a low, a high, a higher low, and a higher high thereafter, and we could then absolutely look towards 373 as being the next target towards the top side, giving you plenty of good trade and range there, 10% up from where we are just now. But of course, in terms of the negativity, if this was just, and it is a small term time frame Fibonacci, let me be clear, if that is just an intermediary phase in the market, and really what we're doing is a bigger macro picture thing, we have to look back to this descending wedge here that's just on the charts, the falling wedge, and look down towards these lower targets, in which case 330s becomes crucially important in terms of retaining it as support. We've been down as low as 332.90, right in here at that 236. We've done enough to kind of reaffirm it and test it and say this is good. But indeed, movements down below that would, I think, signal to us that we could be having a move down towards these lower 300s on the USD pairing. Now, what I do actually also quite like to do is come in here and provide additional context and everything else, but I'm not going to do that in today's Ethereum episode with regards to the US dollar. I would also like to point towards people to look at the Bitcoin pairing, and I would also, I suppose, like to kind of caveat everything that I've said with regards to this wedge by saying that continuation of or lack of continuation, I suppose, with regards to the trend, and instead consolidation in this zone could conceivably lead towards us having a symmetrical triangle using the wicks here of all of this, in which case we can look towards, if we're looking at an intermediary zone, the 324 lower end of that pitchfork in terms of where we could find support should we not actually do any of the larger stuff that I was talking to. So that would be your sort of your counter, your what if Rocky's wrong and there's something else on the go. That could be one of those things to look to, but I'm not going to go into any more detail on that. Instead, I'm visiting over here at this key line here on the Bitcoin pair and this green line in the background. If I zoom on out and go over here, you can see that's the 382 on this Fibonacci retracement. The Fibonacci retracement having come in here at its top end at the 2nd of September, having been drawn in from the swing low before we came up here to those areas. Now you could ask legitimately, why did I not draw in from this previous low over here? That's fair enough question to ask. It doesn't dramatically change the zones in terms of what we're looking at, really. If I draw it in there or indeed draw it in there, you can see we're not dramatically different areas in terms of the overall price targets. You can see here, for instance, this zone which is encapsulating the 618 golden pocket is still overlapping with where we are, for instance, in terms of what we could look to. But that's a valid question to have if you had one. I've chosen to do it from the sort of the previous low here before the high, after this period of downward price action, which really needed to come in and sort of say, right, this is as low as we're going for now in there at that price point before we've had this big rise up the way. Looking back behind that, you could start off by saying here, and that's why it's I'll just leave it in here for now, actually, since we've talked about it. It's not a huge difference in terms of this sort of the basis for coming up with that decision. But where that leaves us, if we have moved it, of course, remains below the 236 Fibonacci over there. We still have had a test of the 382 over here, but we're moving towards that with a valid Fibonacci retracement currently on the go. But we have this potentially bullish price action, bullish bullish pattern on the go on our price action. If I say that this is a falling wedge, then where could the low side of this come in at, having touched the high? Well, start off down here, gone up to our highs, gone down to our lows, gone up to our highs. If we were to come into our lows, we're looking down to that key area, and the key area remains in it around about this 0.03 section in this zone here. We need to see a turnaround if the prices continue to go any further down, or else what we're looking at is this box here having been validated, giving us the shoulder, head and shoulder idea here with a big chunky zone of a neckline before potentially going down, which means that the zone here, the wedge, works two ways. You know, you've got the potential upside target taking us back to around about where we had our right hand shoulder, depending on when you break out of that. But then we also have the downside target taking us down towards the 618. And if we draw in a measured move off the back of the head and shoulders and just do it really, really sort of greedy style, where that actually takes us all the way down to from any movements past the neckline zone, which is why it's positioned slightly above this wedge, is all the way down to where we find the 236 of this, or the 786 of this Fibonacci retracement in here at that point, which is another common turnaround point, you know, should you push past this golden pocket. And of course, the fact that this is then positioned slightly above the wedge gives you that idea of if we were to fake out and have fake out territory from this having gone down to this lower end, and we were to not push out past it but simply fake out then drop back down again, that's where we could see ourselves going. And how that all lines up again with regards to the stuff we were just talking about, excuse me, is that that you'd be coming in here and retesting that 382, which is now neatly positioned over here. By the way, I really ought to have these things with the price numbers on the right hand side. I always forget to do this. Labels right top. That makes it a lot easier to see. So we have that there for us, and that would be a retest of that 382 before continuing on down from a Fibonacci perspective, as opposed to from the perspective of the patterns that we're talking about here. Of course, they all tie together. So that's what we're looking at overall. Can we find it? And in terms of low risk management areas, well, you have a couple, and of course, that's one of them. That's one of them. That's one of them, and in and around these zones are going to offer up your best opportunities for trading, with profit taking coming in here, of course, as well, in here. And in the meantime, there's this one, but that's that there would be if you're trading this in the run up to this, and who knows by the time we publish this video what we could be looking at, but that would be one of them for sure in there as well. Thanks so much for tuning in, really do appreciate it. I'm going to move on now and go on and do the other videos for today. Thanks so much. I'll catch you in the next episode. Is there anything else that I've missed though? Well, there are some things I've missed, and that is to say really thank you for tuning in, to share this with your friends at youtube.com/Rocky Outcrop, to join the Discord if you want to have voice chats with myself and others in there who are all very, very wizened individuals who can give great advice for you in terms of your trading and your life. and there are potential other ideas on the go if we come down towards these zones in terms of movements with regards to, you know, harmonics and Elliott wave and all the rest of it, but I'm not going to talk about that in today's episode either. There is also, if I just move this drawn out of the way, the divergence that you can see in the MACD, but that's of course lending itself nicely to this wedge. Catch you next time.